What are the largest drops in the Philippine Stock Exchange Index, and what caused those drops to happen? Please remember, in the world of investing, it's all about supply and demand. When more people are selling, when there's panic, markets normally drop. So what were the largest one-day drops in history? And let's see what triggered them. If you want to know more about that, then check this video out. Hi everyone, this is Marvin Germo, and if you're new to this channel, please subscribe and smash that bell so you get updated every time I come up with new content about investing, about the stock market, and this time, analyzing and showing you the largest one-day drops in the Philippine Stock Exchange history. So what are you waiting for? Subscribe, like, and stay till the end of the video. Hey guys, so this video is in response to the big drops that we had over the past few weeks, over the past few days, all triggered by what's happening because of the global sentiment that's arising from the coronavirus. That being said, please remember this: the large drops that we're seeing is not something that hasn't happened before. In fact, there were even larger drops before, which I will show you in a bit. But you have to remember this: anytime you enter the stock market, every time you enter the stock market, it always has to be in the back of your head that volatility will always be part of it. Markets dropping will always be part of the game. We don't know how big markets could drop in the future. No one can make a forecast, no one can predict, but you always have to remember this, that volatility will always be a part of the game. It's either that volatility helps you in order for you to buy stocks at lower prices as well, and it also helps you on the upside. When, please remember, volatility does not also happen in downward movements, it also happens in upward movements as well. So volatility can help you in the markets, but you have to remember it will always be part and parcel of how markets move. And that's why when people are saying, paano yung buwabagsak yung stock market, the stock market is not so good. No, it's part of the game. It's part of the game that markets really drop. That's why it's very, very important to put in money that you don't plan to touch for a very, 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 very long time. Financial planning is so important in times like this. That's why I kept saying it, that you don't have to put in money that you want to expose just for the short term, because if it's for the short term and you need it, tuition fee money over the next few months, something that you will use for travel, it should not be in the market because of this volatility. So comment below if you're excited, comment below if you want to see it, comment I'm ready if you want to see it, and let's go.
As you all know, guys, the PSI has dropped over the past few days, and I wanted to show you how this large coronavirus drop fares up against the top 5 drops that we had in, I guess, the past 15 years of the market. Please remember, the largest issue that we had recession-wise was the 2008 global financial crisis. Let's see if that stacks up also in the top 5 biggest large one-day drops in the PSI. So please remember this: a couple of days ago, the market dropped 3.86%. It brought the PSEI to 6,909. I posted videos on that, on the breakdown where it is in terms of price action. But please remember, this is brought about by coronavirus fears. The biggest issue here was cases that were reported in the US of unknown origin, and you saw in Europe and Italy cases started to increase and grow at a massive level. Korea also started to lock down because of the increasing number of people getting infected with the coronavirus. That being said, February 26, 2020, the PSEI dropped 3.86%, 6,000 to 6,909. Now, I want to see how this fares in the grand scheme of things. Is this something that's really, really big? Is this something that's really, really somewhat scary already of a drop, especially for people who have not been investing in the market for those who have been investing for the past 5 years? We really have not seen large, massive drops as well. We haven't seen consecutive drops. Please remember, this large drop, prior to this, we had other drops in the market because of the Taal volcano issue, because of all of the things that has been happening politics-wise here in the country. Plus, when the markets were up in the US last year, we were still down, brought about by fears still of the trade war, and we really have not recovered from that. So, number 5 is this was also, it might seem like a very, very low number, no? PSEI 3,885, but at that time on our time. This was something that was very, very high already to us. I wanted to give you a backdrop that because of the 2008 recession, markets dropped around 1718 levels. It being at 3885 was something very, very high already for a lot of people. But that being said, also it dropped by 5.13%, and the biggest catalyst of it going down was basically, you have to remember, because of the 2008 financial crisis, a lot of countries got hit. A lot of countries that were not doing so well, from Spain, Portugal, Greece, Iceland, etc. And the biggest fear, this was, I'm not sure if you ever heard of the term Brexit, because everyone has been talking about Brexit. But Brexit, there were underlying issues and stories that Greece was about to leave the European Union because they didn't have enough money to pay off its debt, and fears off of that push markets lower. So that being said, 5.13%, bringing the PSEI down to 3,885. Comparing this, it's not a very, very big drop. The one that we experienced this year is not a very, very big drop compared to this at 3885, 5.13%. And then again, it's something that, the trigger of this is something that's foreign. The trigger of this is something that's not really something that's local. That's why it just shows you that large drops doesn't have to mean that there's something bad in the Philippine economy. Large drops does not mean that there's something wrong with us, because you have to remember the large chunk of people investing in our market, or money investing in our market, is predominantly foreign foreign investors. And if something happens overseas, it may cause people to deter and stay away from whatever's happening. Next, number 4 is this. The market dropped 5.96%. Now, as you see, it's starting to scale. The lowest in our top 5 is 5.13. So automatically, this 3.86 from coronavirus does not even make the top 5. Number 4, 5.96. August 22, 2013, the PSEI dropped to 6,136. By the way, at 6.7, we're very, very close and back to that level already. This was the confirmation of the QE3 end, meaning the US government was ending quantitative easing. 3. What's quantitative easing? Quantitative easing was a stimulus program that the US government did to bolster the US economy when things were not doing so well. What's quantitative easing? It's them printing new money and then using that money to pay off government debt. The main reason, the main narrative of them doing that is for money to just revolve around. More money moving around allows more people to have more opportunities, more money moving around, more money that could be loaned out. And people were spooked because when the government confirmed that they will end it, people were not as optimistic yet that the US government was already as good as what they projected it to be. Please remember, from 2020, we were a great way off from 2013. In 2013, it wasn't as exciting yet. The US economy wasn't in full bloom and full effect yet. But that being said, that caused the markets to drop by 5.96 to 6,136 to the level of 6136 for the PSEI. Comment below if you're learning. It's nice to revisit history also, because we get to learn stuff from history. We get to learn things also. I hope that you're getting a lot of learning from this. Number 3, the PSEI dropped 6.70% to 6791 August 24, 2015. In a local setting, when you see things like this happen, people attribute it to the ghost month. This is also ghost month. This is also ghost month, somewhere around August. But relatively speaking, it's not really because of what's happening in the Philippines. It's because of what drives foreign investors to buy, sell, hold, and their latest iteration on how they want to go about their money. So the Chinese economy was slowing down. Please remember, there was a point where the Chinese economy was zooming. You saw their GDP massively increasing, and concerns on their slowdown is what triggered this sell down. 6.70% one day, bringing the PSEI down to 6791. You know what's funny is this was on 2015, 6791. We're back to where it was. We're now in March 2020, but we're back to the 6-7 levels as well. So as you notice it, and I've been saying this in the previous videos, that's what happens when the market is sideways. When the market is sideways, we've gone past more than 5 years already, but literally speaking, we're back to where we were on August 24, 2015. Now, let's look at number 2. So as you can see now, it's starting to scale up and go up 5.13, 5.96, 6.70. Number 2 is June 13, 2013, 6.75%. The PSEI dropped at 6,114. Please remember, number 4 was the US government confirming the end of QE3. This one, the large drop, 6.75% drop, 2013, was basically just the fear that that QE3 would start to end. So as you notice, there's a different drop when it got confirmed. Here was just rumblings, fears, forecasting, predictions that it would actually end. Now, what I want you to get also from this in terms of what you can learn is it doesn't have to be true yet for markets to go down. It can just be a fear of what could possibly happen. That's what would cause markets to also go down. But please remember this: them ending QE3 was not actually bad for the US economy. After that, you saw it from 2013 to where we are now. The US economy, especially when we closed 2019, is stronger than ever. So them ending QE3 was just at the right time, right pace. Them showing the world that the US economy was back and was doing massively better already. So just back to this, 6.75 dropping the markets to 6114. Again, it did not mean that there was something wrong in the Philippine economy. It was pretty much predicated on what was happening globally. So if you look at this, coronavirus global, EU default global, confirmation of QE3 and global, concerns on China's slowdown global. This is, by the way, number 3 is just a concern. Number 5 is just fears. Number 2, fears, meaning they are all just people's emotional reaction to whatever outcome or possibility that could happen. That's what I've been saying, that it doesn't have to be true yet for markets to go down. It's just fears or whatever forecast that people are actually thinking. And number 1, the crash in 2008. This is what started everything. 12.27%. Markets dropped to 1713. This was when Lehman Brothers filed for bankruptcy. Please remember, the US economy went into a tailspin when the large banks were not able anymore to, because of the defaults of the derivatives that they got. Lehman Brothers, one of the largest and oldest and biggest banks in the United States of America, filed for bankruptcy, and this is what caused a lot of other smaller bankruptcies or even larger bankruptcies in the US to follow. Please remember, Lehman Brothers failed, unlike other banks that were in trouble. They got bailed out. Lehman Brothers had to close down. A lot of people lost jobs, and that started a larger amount of fear in the US economy. That triggered a lot of fear and caused the US recession as well. So there again, Lehman Brothers, external effect. But even though we're miles away from the US government, we're miles away from the US economy, it still caused our markets to go down. So please remember this: money can be made when you see opportunities like this. Money can be made when a lot of people are scared and want to go out, and you just look at the fundamentals. Were there any bad things that happened in the Philippine economy in 2008 when Lehman Brothers closed down? How did it affect the large cap index? How did it affect people buying Ayala Land? How did it affect SM Prime, PDO, and at that time PLDT was one of the largest stocks in the Philippine Stock Exchange Index? How did it affect people loading PLDT, Smart, people buying prepaid and postpaid plans? How did it affect it? Because if it had no effect on it, then it would have been a good time, a good shot to double down and buy. So again, what's a moral lesson here? Fast forward to the drop because of the coronavirus. This is a golden opportunity for you if you are a long-term investor. I'm not saying this for traders, but this is for long-term investors that have very long timelines. These are for people who are very passive in their investments, that they don't want to trade up and down or in and out of whatever positions that they want. But the biggest concern before, over the past years, was the market was too expensive, the market was too high. Guess what? The market now is not too high, the market now is not too expensive, the market now is cheap. This is your golden opportunity also to position in a lot of good stocks that you can forget, that you can come back later on. Again, when I say forget, it's not that you don't you don't study what you're buying. You have to study what you're buying, but you buy them because they're good, they're growing, and just because of the large drop, they're undervalued. So I hope you guys got a lot from this. Comment below if you're learning. Comment below if you want more of items like this. Comment I want more if you want more of this.
I hope you guys got a lot from all of this. I hope this gave you enough insight. This is to show you that there's no specific date, no specific time, no specific trigger that could cause markets to go down as well. It could be from a variety of things. It could be from what's triggering other foreign funds to get out as well. But that's why technical analysis is so important, because everything you need to know can be found in the charts. Everything you need to know can be found on what technical analysis is telling you. That's why if you've been watching the previous videos that I've been making, most of the downward moves that I've been analyzing has been pretty much been caused by technical or been analyzed on the lens of technical analysis, because you can see it when people are going out, when they sell, stocks go down, and it could give you triggers. Please remember, breakdowns could be triggers for you to sell, downtrends could be triggers for you to sell, and reversals upward, bounces from support could be triggers for you to buy as well. In the same regard, when you're looking at fundamentals, please remember this: when markets drop, stocks that you like drop, but its fundamentals remain unchanged, those could be buying opportunities for you to buy those stocks at massively cheaper levels when no one else wants to buy them, as long as at the back of your head you know that because it's still bearish, there's still a chance for the stocks to go down. You're holding them, and your time period for them being in your portfolio will be a stretch longer, will be a relatively longer time as well. So there, I just want to end inviting you to all of the seminars that I have. I have classroom trainings in Manila this March, in London this April, in Singapore and Doha, Qatar this May, in Auckland, New Zealand this June, in Sydney, Australia this July, and in Dubai and Tokyo this November. All of the details for that are in the description below. You just have to click it and it will lead you to the landing pages towards it. And for those who want to know more about the basics of the stock market but don't have time to attend my classroom trainings, we have online courses. Number one, it's a Tagalog basic course with Chinkitan, where we talk about the basics of the stock market in Tagalog. Then we also have another online course with Sean C, where we talk about the basics of business, entrepreneurship, investing, and making money. It's called Make Money, Grow Money. All of the details on how you can sign up for that are also in the description below. And lastly, a lot of people have been asking about my books. My books are available now via Shopee. It's about the basics of the stock market, technical analysis, and fundamental analysis. All of it are in the link below, and I hope that all of this helps you trade the markets with confidence, because that's all I want. I want you guys to win. So this is Marvin Germo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, guys, and God bless you all.